Hey everyone, Mike here. In this video, we're going to be talking about Tesla. We're going to be trying to make some guesses as to why the Tesla stock is shooting up like a rocket and if you should buy or not. So again, disclaimer, this is not financial, tax, or legal advice. You should make sure to do your own due diligence before investing in a stock, and I'm not responsible for any gains or losses that you may incur. So let's get right into it. The two things that we're going to discuss with Tesla are its product and its product strategy, and its financials and how it stacks up against other companies. So if you didn't know, Tesla mainly sells cars, and what that leads me to believe is investors really see electric cars as the future, and Tesla will be the significant player in electric cars. Also related to that is the energy storage and energy distribution, such as Tesla's solar walls, their battery packs, and their supercharging network. So just quickly going over Tesla's products, they have the Model 3, which is a small sedan, the Model S, which is their higher end, more premium sedan, the Model Y, which is their lower end SUV crossover, their Model X, which is their high end big crossover. So that's kind of the products that they offer. And again, if you believe that electric cars are the future, and you believe Tesla will be at the forefront of this electric car revolution, they'll sell a lot of cars in the future, then this makes sense why Tesla is a buy. And just to throw out some numbers as to how many cars are being delivered, in Q1, so last quarter, Tesla delivered about 88,000 cars. So this is across all models. In Q4 of last year, they delivered about 112,000 cars. So maybe there's a little bit of a coronavirus effect, but a lot of cars are being delivered. Maybe around, if you annualize that, 400,000 cars are being delivered every year by Tesla. The crazy thing is they have 40% year over year growth. And this is just Tesla cars. So this means every year they're delivering 40% more cars. So that kind of shows you not just how much Tesla is growing as a company in terms of their car deliveries, but also how the market of EVs and electric vehicles are growing. So my hypothesis is that yes, EVs and electric cars are the future, and Tesla will be a significant part of that. But I think there's still a question of how much market share will Tesla actually gain from that? And we'll go over that in the financials and compare that to other companies. But let's continue down the road with their products. So now diving deep into their product, let's look at their cars. I would say their cars are superior to not just other electric vehicles, but also to gas vehicles. They've been rated really well for safety, which is, super high safety scores. They have a really good driving experience from acceleration to handling, and this is mainly because of the battery packs. The battery and the electric motor gives you instant torque and instant acceleration. There's really good handling because of how the battery packs are situated. It's really light because there's really no engine, there's no gas. It's just battery packs and a motor. It also has unique interiors, especially the Model 3 and the Model Y, which might actually be a pro or con depending on what you like and what you don't like. So something else that is super interesting is they have a lot of storage space. So there's something called a frunk, which a lot of people like to say it's basically a front trunk. And that frunk just gives you a bunch more space to work with, which is awesome if you're looking for cargo space. And I think a big selling point is actually there's not a lot of maintenance. So with a regular internal combustion engine, you have to get your oil changed, you have to get, your engine serviced, you have to do a lot of maintenance. With a Tesla, pretty much all you have to do is get your tires rebalanced. There's very little maintenance. Your batteries, there's nothing really to do there. Your motor, there's really nothing to do there. You basically just have to get your tires rebalanced, your tires changed, and that's like the main wear and tear on the car. So very little maintenance, both in terms of the hassle and also in terms of cost. So I would say Teslas are clearly superior to other gas guzzling cars, except for maybe price. Teslas are on the pricier end. They start at $35,000. So if price is what you're looking for, then yes, definitely internal combustion engines are the way to go. Now looking at Teslas compared to other electrical vehicles, this is also where Tesla really shines. Compared to other EVs, there's no comparison with range. Tesla gets anywhere from 300 plus in terms of range, but most other EVs barely even crack the 200s, the low 200s to the mid 200s. So you got the Chevy Bolt, you got the Nissan Leaf, you got the Jaguar I-Pace, and you have the BMW i3. They're great cars, but they do not stack up to Tesla in terms of range. And range is pretty big. I would say range makes or breaks a lot of EV driving experiences right now, because range does not compare at all to internal combustion engines, and the charging network versus the gas network is not nearly the same. So you want to have this long range so that you don't get what people call range anxiety. Adding on to that, when I mentioned the charging network, Tesla's charging network is superior both in terms of coverage and in terms of charging speed. So not only can you use Tesla's supercharging network, but you can also use other third-party networks such as ChargePoint. If you have something like a Nissan Leaf or a Chevy Bolt, you can't actually use Tesla's supercharging network. It's only reserved for Tesla cars. And in terms of charging, Tesla actually has spent a lot of R&D into their charging technology. For reference, with their latest V3 supercharger, in about 15 minutes, you can recharge 180 miles on a Tesla. Compare this with a ChargePoint fast charging station, which gives you about 80 miles in 30 minutes. So that's a huge difference, and I would say Tesla's charging technology is far and away better than the next competitors. The only thing that I would say is questionable about Tesla is their autopilot. So you can actually buy an autopilot package, which doesn't activate autopilot just yet, which is self-driving car, but it will actually unlock it in the future. And so I would say this is questionable across all companies, but Tesla allows you to buy it upfront right now. And I would say that's questionable in terms of, will it actually launch? Still unclear. They say it will, but you can never really trust them. So that's kind of their product lineup. And again, to recap, I think they're super amazing cars, much better than regular internal combustion engine cars and much better than other EVs on the market. So my only main gripe with the Teslas is probably their price. They start at $35,000 for the Model 3, go up all the way to over $100,000. And obviously, if you're looking for a cheap, affordable car, Tesla is not the right option for you. But if you're looking for a solid product, the best EV on the market, and the best driving experience, I think Tesla is far and away the best car in the market. And I can kind of understand why people are buying their stock, because they can see the quality of their car, they can see how superior their car actually is, and they can see, investors can see Tesla at the forefront of the EV car market. So that's kind of their product. Let's talk a little bit about their product strategy, how they got to this point. So interestingly enough, they started off actually building something called the Model S, which is their high-end sedan. It started, at a pretty high price point, over $60,000 for the base model. They wanted to first build this high-end car and really sell themselves as a good consumer brand that built high-end cars and nice cars that people wanted to drive. They wanted to build up their brand image. And then after they did that, that's when they started to move into lower end cars, such as the Tesla Model 3 and the Model Y. So the interesting thing is, they actually have very little marketing, actually zero marketing, and a lot of this is driven by word of mouth and people sharing their experiences and their videos and on social media about just how fun Tesla is to drive. So in terms of their product strategy, they really focus on building the best in-class car, which drives conversations and drives word of mouth marketing for them without them having to do anything. Something else that is really big is they're now starting to expand into other categories of cars. So again, SUVs and sedans, but they're also trying to get into semi-trucks, which was announced, and also pickup trucks, which is super big in the US. So you can clearly see where they have growth opportunities for their cars, and you can clearly see how they're expanding their fleet of cars. They're also building super flexible car designs and battery packs. So actually the whole chassis that they built for the Model 3 is actually being reused for the Model Y. And that saves a lot on R&D costs. So you can see them already starting to cut costs. On top of that, they're automating a lot of their manufacturing. It's actually really hard and they're going through a lot of trouble, but I think this is the future for car manufacturing. It's automation, it's robots, and I would say they're definitely the leaders in terms of automating their factories, which ultimately helps cut down their margins. The less people they have to hire, the faster these machines can produce, faster than humans, the better quality cars, the more cars they can produce, and the cheaper cars they can produce. So I think that's a plus. So now let's take a look at Tesla's financials, their stock, and how they're doing as a company relative to other companies in the industry. So as you can see, Tesla's stock, it's about 1,300 right now. It's been a rocket ship since the start of the coronavirus pandemic. in around March. At its low point, it was around 360, and now it's gone up to 1,300. So that's like a huge increase. That's like a 500, 600% increase. So it's just been a rocket ship in the last month. And for reference, it has a market cap of $250 billion. And I think that's a pretty high market cap, actually. If you were to look at the market caps of other companies such as Toyota, which has about 173, plus they have some cash and some debt. So I think this is probably around 200 billion. So if you compare that to Toyota, the largest manufacturer and seller of cars, it's actually pretty crazy, Tesla's valuation. So Tesla is valued more than Toyota, which is insane. And then if you look at Ford, they have a market cap of about 25 billion. So not only is Tesla worth more than Toyota, they're worth more than Toyota plus Ford combined, right? And then if you look at Volkswagen, another big conglomerate of car manufacturers, that's worth about 48 billion. So Tesla is bigger than a lot of these companies. So when it comes to Tesla's market cap, I would say it's probably a little overvalued. Even though I like the product, even though I like their strategy, I would say it's a little bit overvalued, and investors are probably a little too bullish on their market cap, especially when you look at Toyota and if you look at Volkswagen. I would say Tesla right now should not be at the same valuation as Toyota and Ford combined, right? These are proven companies that are selling cars. They don't have nearly as much growth, but they're still selling cars. And I think the best way to look at that is through revenues and how many cars Tesla delivers. So if we look at their total revenues, we can see that they're growing at about 32% year over year. Probably even around 40 if you didn't have coronavirus this year. I think if you were to look at Toyota, they're probably growing around like 1 or 2%. So obviously Tesla is growing super fast. But I think the question is, how sustainable is this growth, right? If you're a small company, you're obviously going to grow really fast. And compare Tesla's car deliveries, which I would say they deliver about 450,000 cars a year, especially if there wasn't coronavirus. I would say if they delivered 400,000 a year, that's nothing compared to Toyota, who delivers 10 million a year. So that's a pretty big difference in just number of cars delivered. Coming back to their financials, something else that I want to reiterate is their gross margin, which is about 25%. So this is actually pretty in line with Toyota's gross margin, which is about 24%. I feel like Tesla, with their automated manufacturing and their better R&D budgets, I feel like they can increase this, but this has been their highest in all of last year. So I wouldn't expect to see this grow too much more, maybe to like 30%, but I think that's still pushing it. So just looking at Tesla's financials, they're growing a lot. They're growing at 30 to 40% every year, and they're making a lot of revenue. I would say Tesla right now has really strong product. They have really strong revenue growth. They have really strong financials, but I would say it's being pushed up too much by bullish investors. I would say it's not comparable right now to Toyota. I can see Tesla growing to Toyota scale, but I don't really see how they can have a much better margin or how they can eke out more profits. And if they do get to Toyota scale, I don't see why they should be worth the same or more than Toyota right now than in the future. But I do want to caveat that Tesla is growing really fast. I can understand why investors might see a lot of future potential growth, which is maybe why they want to buy into the stock right now. My recommendation is I would buy Tesla stock, but I would not buy it right now at its current valuation. I would probably buy it if it was maybe worth around 100 billion, but even then I would strongly reconsider if I would actually buy it. I love their product. I love their company. I don't know if it's a strong buy right now. And I would argue that their stock is overvalued for what it's worth. I would say there's too much potential growth built into the stock. And I would say hold off, wait a bit, see how the stock moves, especially during this coronavirus pandemic, and then buy in later if you feel comfortable. So that's my recommendation. But again, disclaimer, please do your own research. I am not responsible for any losses that you may incur, and this should not be taken as final legal, tax, or investment advice. See you guys.